All right, so balance sheet, current assets versus long-term assets, series 1 of 7. So first I want to do a quick overview. So the balance sheet, it shows the financial position of the firm at one point in time. It is composed of 3 parts. So we have liabilities, assets, owner's equity, and so basically on the balance sheet, it's asset equals liabilities plus owner's equity. All right, so assets are any item of economic value that can be easily converted into cash. Essentially, it's what you have. Examples of assets are like a house, a car, or a computer. Okay, so current assets and liquidity. Current assets are also known as short-term assets. They're called current because these assets will be used within the next 12 months. Current assets include cash, accounts receivable, inventory, marketable securities, and prepaid expenses, and other liquid assets that can be readily converted into cash. Current assets and liquidity again. Okay, so accounts under current assets are listed in decreasing order of liquidity. So liquidity means how quickly assets are turned into cash. So the ones that can be turned into cash the fastest are definitely going to be there first. So an example of that can be like inventory in a restaurant. We sell off food quickly. Also, a prepaid cell phone. Let's say you put $100 on a prepaid cell phone and you realize that you have to leave the country for the next 12 months. So you want to sell it. Now, of course, you're not going to get the $100 back. However, you could probably get like $60 for its worth. So it's easily converted into cash. Another example, a furniture business going out of business. So they want to just get rid of everything, all of their furniture. They're not going to get everything back for it, like the full value. However, they will get something. Okay, so current asset examples. This is just to show you how it looks on a balance sheet. So they will actually be all at the very top, right there where it says assets under current assets. So of course cash, we can see this on Jamba Juices. And then we have inventory. So that's probably like all their frozen mix and their fruits and veggies that they use in their drinks. Prepaid rent, it's probably cash, and prepaid expenses and other current assets. All right. So long-term assets are assets that you can anticipate your business will use for the next 12 months, like for more than the next 12 months, excuse me. Some of the most common long-term assets include essentially it's PP&E. So you have lands, buildings, furnishings, and equipment. So like a long-term asset could be a delivery truck itself, because it basically will last you for quite a few years. You're going to be using this asset. But if you have not paid it off, then it will also be under your liabilities. All right, and that's it for balance sheet, current assets versus long-term assets.